A growing number of VET investors have been asking me why the market price seems to be growing relatively slowly in comparison to many other cryptos, particularly small cap projects, many of which have been doubling, tripling and more over short periods of time. So why is it that VET seems to be moving so slowly, especially when VeChain have so much adoption and genuine use, and offer valuable real-world services? And I have talked about this particular subject before, but the number of requests for another updated video has been really high. And I'll open this video with the same statistic that I used to open the first video. The price of VET over the last year has risen by well over 25 to 1, a gain of over 2,500% in market value, which actually is very impressive. I mean, let's consider the alternatives. What can you get in terms of interest on savings? Maybe 0.1%, but even then you have to subtract the eroding effect of inflation on the real purchasing power of money. And if we look at the stock market, the S&P 500 is yielding around 2.5% per year, which is again a very poor yield. I mean, for every $100,000 of cash invested into the S&P 500, we're talking about an average monthly return of around $200, perhaps less after taxes. And I want to take a moment out to ask you to subscribe to the channel if you're enjoying this video so far, as you'd really be helping me out and enabling me to spend more time producing these videos. And so anyway, in terms of alternatives, there really isn't very much out there in today's zero interest rate, highly liquid market, where there is a huge oversupply of cash and a relative shortage of income producing assets to be bought, hence the incredible level of inflation in the stock market and in real estate prices we've seen over the last 5 years in almost every developed country in the world. But the thing is, many of you guys watching this video won't be interested in other asset classes. You'll want to know why VeChain is performing poorly relative to other cryptos, and the reason will differ depending upon who we ask, as it's effectively a subjective question. My opinion is that in the short term, which can be a matter of weeks or a matter of months, there is no meaningful correlation between real value and market prices. And what I mean is that if we are looking at a 6-month chart, the price movement of crypto A and crypto B may be very different or very similar, but it doesn't mean anything, as short-term prices are determined by the consensus opinion in the short term. And as we all know very well, the short-term consensus opinion is always changing and is highly volatile, and is therefore a very unreliable indicator of real value. And that's why I don't pay any attention to short-term price movement. The case in example is Gamestop. For those who are unfamiliar with what happened to this stock, a bunch of hedge funds and retail investors became locked into a game of chicken, as the hedge funds were generally shorting and the retail investors generally buying long. And anyway, because a bunch of retail traders on Reddit made a whole bunch of money in the stock, it dragged in a huge number of people, and the price of the stock is currently at around $180 per unit, which is nearly 50 times the market price this time last year, and likely way above the fair value as well. And just because the market price of Gamestop has risen a lot, it doesn't mean that it was a smart decision to buy, because we also have to consider the risk that we are taking on when making an investment, and not just the potential for reward. I could take my life savings and find a casino and then bet all of my money on the roulette table, and maybe I'd win and I'd double my money without any real effort. But the thing is, it wouldn't be a smart thing to do, as the odds are always against me. And in the case of crypto, the market right now is a lot like a casino, and everybody seems to be winning, and just like in a casino, the biggest wins are usually the poorest bets from a statistical point of view. And yes, there are many altcoins which are doing 50 or 100 to 1, sometimes even more, but they are equivalent to the horse with odds of 1,000 to 1, that being the chances of long-term success. And the thing that is unique about crypto is that everybody is a genius while the market is rising, and being a value investor, the question which I ask myself is, will this project be around and be in a better position than today in 5 or 10 years' time? And very few of the altcoins which are pumping at the moment satisfy that criteria, which then means that the only way to make money from them is to sell them to somebody else at a higher price than I paid, which means that it's then a race toward a cliff edge, and somebody has to be the one left holding the bag when the prices crash. And the thing is, VeChain in my view is one of the few crypto projects which has actual underlying value, and which will likely still be around in 5 or 10 years' time. And I for one couldn't care less whether other people are making more money than me right now. I'm not worried about the 3-month average, I'm worried about my long-term record. And by the way, I'm not saying that it's always a bad thing to chase gains in altcoins, but what I am saying is that somebody has to be caught without a chair when the music stops playing, and nobody ever thinks that it will be them. And for me personally, I'd much rather hold a bunch of cryptos which I'm happy going to sleep at night not worrying about whether the market will crash and I'll lose 80 or 90% of my capital. Anyway, that's all for this video. If you enjoyed it and found it to be useful, do me a favor and subscribe to the channel. Thanks for watching.